Good morning and happy Friday. You're watching Business World Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our banner story. Finance Chief Sonny Dominguez says the government is sticking to its full year growth target of 4 to 5% as Metro Manila eases to a less restrictive quarantine classification. He also tells Bloomberg TV that the government is open to raising more funds through global bonds. Let's take a listen.
We expect our economy to really start opening up this quarter.
Do you expect to meet the 4 to 5% growth target set by the government earlier this year?
Yes. We're sticking to that growth target, and we think we'll hit it. After all, we hit 11.5% in the second quarter.
We've started to issue retail dollar bonds. Now, this is precedent setting. I think that's part of it. That's part of the satisfaction. But do you expect it now to become a substantial vehicle for financing the government?
Well, we decided to issue retail dollar bonds, and we were quite surprised that the uptake was actually 4 times more than we expected. As you know, we have relied mostly on domestic finance for our financial needs. Up to 75% of our borrowings are domestic, and only up to 25% are foreign borrowings. So we decided to open the market for retail dollar bonds. We have a lot of foreign workers who hold dollars, and the banks are giving them very little interest rates. So we decided to give our small depositors a chance at buying retail dollar bonds. You can buy retail dollar bonds for as low in small quantities like $300.
Okay.
And you can buy it on your cell phone.
All right. Well, maybe I'll have to look at my cell phone. In terms of overseas bond sales, though, are you planning any more sales later this year, early next year?
We are looking at a possible issuance of bonds. We issued 3 very successful bonds this year, $3 billion in the U.S. market. We had issued $2.5 billion equivalent in euros and around $500 million in the samurai market. All were very well received.
Meanwhile, the House of Representatives has realigned 65 billion pesos of the proposed 2022 national budget. That's for the procurement of vaccine booster shots, assistance for displaced workers, and down payment for C-130 aircraft for the military. House Appropriations Committee Chairman Eric Yap said the Health Department will receive an additional 29.5 billion pesos, including 20 billion pesos for the procurement of vaccines and booster shots. He added that the amendments to the GAA of 2022 have been approved by the small committee composed of majority and minority leaders. The committee was tasked to consolidate the proposed changes after the bill was approved by the House on third and final reading on September 30th. Yap added that the House expects to transmit the final copy of the proposed 5 trillion peso spending plan to the Senate by October 27th. Kicking off Friday's report with a look of what's going on around the world in terms of COVID. And you can see on my terminal here the worldwide cases versus the Philippine cases, which are, of course, now below the 10,000 or even 9,000 threshold. And what's going on in terms of the reopening of other economies? The biggest news here is Sydney, which will be ending quarantine. They will end the requirement for vaccinated travelers to quarantine. That's going to start from November 1st. You've also got United Airlines. They're planning the largest expansion into Europe, anticipating that next summer will deliver record traffic over there. You've also got Singapore, 80% fully vaccinated, but still infections are soaring. They're still looking to pivot away from the zero tolerance to a reopening, and there is divided sentiment over there whether that is the right strategy. You've got Thailand, the quarantine has already been scrapped for travelers coming from the US, UK, China, and there's going to be a wider reopening to be expanded in the coming months. Let's take a look at the equity markets here. You can see the US enjoying quite a bump up. Take a look at the S&P 500. They're up by 1.7%. That was the best day they had in the US since March. That as the 10-year treasury also fell. This on the back of robust earnings and also falling US jobless claims, helping boost sentiment over in the US. And when you take a look at Asia Pacific, although it's quite in the red when it comes to other markets that are still closed, you have, for instance, Hong Kong that was on holiday, so they're reopening today. But you can see Japan enjoying as well, or at least feeling the spillover effects from the United States, looking to rise up. Together with that, you've also got the S&P or ASX 200 over in Australia and the FTSE Straits Times in Singapore enjoying a rally this morning. Let's take a look at our own index a few minutes into trade, up already by 0.5%, 7222.09. So will we be able to sustain this rally above 7,200? And to answer that question, we have with us Manny Ocampo, Managing Director for Equity Capital Markets at ICCP. Good morning, Manny, and welcome back.
Hi, morning, Danny. How are you?
Very good, thank you. So nice to see you again, sir. Sir, above 7,220 already here, and quite a spike up already in just 6 minutes into trade. Is this just general excitement over, of course, this level 3 alert level that has been imposed or reopening? Or is this something that is going to be long term, that's going to be the start of, something that we will not turn back anymore to the lockdowns that we had before?
Yes. Well, clearly, there's a knee-jerk reaction on, the easing to alert level 3 or, yellow or whatever that, whatever our government is doing right now as far as quarantine protocols are concerned. But yeah, it's in reaction to that. We also note that, in the next couple of weeks or so, you will start seeing corporates coming out with their third quarter results, and a lot of people are anticipating that 3Q numbers should be a lot better. So that if third quarter numbers do come out in positive territory, we should be looking at hopefully a sustained rally, as it is right now on the technicals. No, 7,200 is a resistance, and if we sustain and current levels, I guess next target would be 7,500. Yeah. Done.
Okay, sir. You mentioned that the third quarter earnings are going to be pivotal here, but of course we experienced quite a lockdown, at least in Metro Manila, in the
Yes.
month of August. What are you expecting to see here? Are there any surprises that you're hoping to see, or specific sectors that you're watching out for?
Well, still, I think the banks should be able to do decently well. A lot of companies should post stronger growth in earnings. Number one, because of Create. So there's that tax
Okay.
savings impact as well, no? And and that's that's a real savings that gets sustained. It's not a one-time thing. No? The other thing is going back to basics. I think we like the cement sector as a
Okay.
right now that sector has lagged, if you'd like. So we'll take a look also at possibilities because of the shall we say LGUs moving up or stepping up infrastructure, at least on an LGU level, to maybe catch up on some pre-election spending, if you'd like. Yeah.
Okay, so cement industry here and possibly infrastructure spending on the LGUs. What about the cyclicals? We've seen, for instance, the Cebu Pacific soaring
Sure.
yesterday, but even ahead of this alert level 3, just on the back quarantine being shortened, or
Yeah.
even no quarantine for the green lanes. How viable is it to be entering the cyclicals already now? Is this actually a good time to be betting on that continued recovery and less and be less risk averse?
Well, considering the price levels of airlines, unfortunately, Philippine Airlines is a little bit more challenged than Cebu Pacific on finances. But Cebu Pacific should be able to capture any upswing in uh, domestic tourism. No? And as we saw with the easing of the lockdown, we probably will see a pickup in domestic travel. I mean, people want to get out of their homes, their localities, and start to move around again. So, and that's also that dovetails quite well into the Christmas season. So we'll see that. The other sector aside from airlines would really be the QSRs. So people
Okay.
being able to dine out again, go to places like Max's Fried Chicken, KFC, Shakey's Pizza, even Jollibee, so
Okay.
more in-store type dining. We should see a pickup in that sector as well.
Okay, sir, let's talk about Jollibee because they've been in the news as of late. Apart from expansion overseas, they've also raised 12 billion pesos on a follow-on offering, which they said three times oversubscribed. They're going to be partially paying the perpetual securities and also just store expansion. Is this the time? What do you think about this? They're expanding overseas. We had an interview yesterday with the general director of business development in Europe, and he mentioned that it was actually a time for them to get properties in prime locations in Europe that were closing down, and they got it at a good deal, and that's what they're doing right now. Is this a strategy that you are in favor of as an investor? Them looking at overseas properties instead of domestic expansion.
Well, I guess now would be the best time for them to get into it while, in their words, things are cheap, rather than when activity picks up. So and Jollibee having the financial strength, their balance sheet is very strong. So they can pursue this kind of growth strategy, and they have the wherewithal to wait out the recovery. Europe, the United States will probably recover a lot faster. So that's I think it's a good bet to take a look at for Jollibee.
Sir, this even as they had some struggles pre-pandemic in integrating the Smash Burger and Coffee Bean acquisitions, you still believe they have a strong balance sheet to do more not necessarily acquisitions but expansions.
Yeah, expansion. I think they're realizing now that the Jollibee brand really has a shall we say a franchise and a strong brand of its own. So they'll take that out and grow in the markets where you probably have a fairly large Filipino population as well. That will be the, I guess, first draw of the new Jollibee stores in the new markets they're getting in. And there's a very strong support from the Filipino market. As we've seen, they've gone to the United States, even the Middle East. So they have a very strong Filipino following there. And that should sustain the stores.
Okay, let's go back to airlines for a bit, talking about this oil story, which of course is it's now pared back a touch, but it was Brent was already above 83 a barrel. Tell us, sir, how will this affect the struggling airline companies already, and not just them but other transport sectors and even second round effects of inflation?
Yeah. Okay. On oil, no, I think what has happened here is that the supply side is only waking up to a pickup in demand. The demand pickup is really because of the easing, the opening up of economies worldwide, and suppliers, people in the Middle East, Russia, etc., have not really shall we say during the pandemic they've shut down some of the spigots or the faucets for their oil production, and they have been slow to open up this time. So at some point in time, people, they will open up the supply lines again. It'll be it will be foolish for them not to take advantage of current high prices. So there should be some kind of alignment again on oil prices when the supply demand situation, shall we say, equalizes. So
Okay.
the run up is maybe, we think temporary.
Okay.
There will be demand towards the end of the year, clearly, but beyond that, things should normalize.
Okay, so oil story not too worrying for you here. A lot of ways for them to mitigate those rising oil prices and hopefully something temporary. Thank you so much, Manny Ocampo of ICCP.
Thank you.
Here are the other headlines we're keeping our eyes on. Jollibee, Ayala, and Aboitiz have made it to the Forbes' annual list of the world's best employers. JFC was at the 256th spot, Ayala ranked 485th, and AEV settled at 665th place. They were among the 750 firms across the globe that are included in the publication's ranking. Forbes worked with market research firm Statista to compile survey results of over 150,000 full-time and part-time employees of multinational firms from 58 countries. A company's branding, economic footprint, talent development, gender equality, and social responsibility were taken into account. Forbes listed South Korea's Samsung Electronics as the top employer for this round. It is followed by 4 U.S. firms, namely IBM, Microsoft, Amazon, and Apple. Now, most pandemic displaced workers in Metro Manila are expected to return to the workforce with a lower alert level in the region. That is according to the Trade Department, which earlier reported that the current number of displaced workers is at 300,000. But the agency has yet to give specific details on exactly how many of the remaining displaced workers will be returning to work. Last month, Trade Secretary Mon Lopez said he supports allowing most businesses to open regardless of alert level. He said and added that capacity levels should only be limited when there is a rise in infections so as to promote business continuity. And that's a first look into the business day. Today is October 15, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.